Let's be honest, the world feels a little shaky right now. You've got geopolitical tensions with Russia and China, you've got figures like Donald Trump making waves, and through all this uncertainty, the price of gold has gone through the roof, hitting all-time highs. It seems like everyone is running to it for safety. So let's dive in and figure out what is really going on.
And when I say through the roof, I am not kidding. Just look at these numbers. Since Donald Trump's election, the price of gold has surged a massive 85%. It has left other assets, like stocks, completely in the dust. A rally like this, well, it gets everyone's attention.
And that brings us to the million-dollar question, doesn't it? Is now the time to jump in? But here's the thing. The answer isn't a simple yes or no. It totally 100% depends on why you want to own gold in the first place. So in this explainer, we're going to break it all down. We're going to look at why governments are suddenly buying up so much gold, whether it can actually protect you from inflation, its role as the ultimate doomsday insurance, if it can make you rich, and finally, the right way to buy it, if you decide it's for you. Okay, first up, why are governments suddenly stockpiling gold like there's no tomorrow? Well, a huge piece of this puzzle goes back to something that happened in 2022. That's when Western governments froze Russia's foreign currency reserves because of the war in Ukraine. And that move sent a massive shockwave through the world. It was a clear signal to every other country. If you keep your savings in another country's currency, it can be taken away with the stroke of a pen. But physical gold, the actual bar is sitting in your own vault, that can't be touched by foreign sanctions. Now that's a huge deal for a central bank, but probably not the main worry for the rest of us. All right, let's move on to the reason you hear all the time. The big one. People buy gold to protect their money from inflation. The classic story everyone tells is about Germany in the 1920s, when hyperinflation made paper money worthless, but people who held real stuff, like gold, saved their families. And there's this great old saying that just perfectly captures gold's long-term magic. Now, it's not a literal scientific comparison, of course, but it illustrates a really profound truth. Over huge stretches of time, centuries even, gold has this unbelievable knack for holding on to its value, its purchasing power. So why? Why has gold been our go-to store of value for thousands of years? Well, it boils down to these four basic things. It's rare. It's almost impossible to destroy. It doesn't rust or decay. Humans find it beautiful, which gives it cultural value. And maybe most important of all, you can't just print more of it. Its supply is fixed, which means its value can't be inflated away by politicians. But, and this is a huge but, the story gets a lot more complicated in the short term. Just look at this. During that big inflation spike we all just lived through after COVID, gold's price did nothing. It actually went down. And get this, from 1980 to 2000, a time with pretty high inflation in the US, gold lost 80% of its real value. So as a short-term inflation hedge, it can be pretty terrible. Okay, so this brings us to a totally different and, more extreme reason for owning gold. We're not talking about hedging against a few points of inflation anymore. We're talking about an insurance policy against the complete and total breakdown of society. Exactly. This is where you have to completely change your mindset. You stop thinking like an investor hunting for a return, and you start thinking about survival. The goal isn't to make money, it's just about having something real and valuable when every other system we rely on collapses. The logic here is brutally simple. Imagine a major war or crisis hits. The banks shut down, the ATMs are dead, the internet goes out. Your online brokerage account is completely worthless. In that world, what matters is a physical asset that everyone on Earth recognizes as valuable and that you can literally carry in your pocket. But this is where a lot of confusion comes in. If gold is so precious in a crisis, does that mean it's a good investment to grow your wealth during normal times? Is this how you get rich? And here is the absolute most important thing you need to understand about gold as an investment. An ounce of gold is, well, it's a lump of metal. It doesn't build a factory, it doesn't invent a new product, it doesn't pay you rent or a dividend check. The only way you make money from gold is if someone else, down the road, is willing to pay you more for that same lump of metal. And this slide lays out the difference perfectly. When you own stocks, you own a piece of a business that is out there actively trying to make things, sell things, and generate profits. Gold just sits there. It preserves value. One is for creating wealth, the other is for holding onto it. They are two totally different jobs. Okay, but there is one modern investment strategy where gold can actually make a lot of sense, and that's diversification. You've heard the old saying, don't put all your eggs in one basket.
That's all this is. The idea is to own different kinds of assets that don't all go up or down at the same time. And historically, gold's price often zigs when the stock market zags.
So by adding a little slice of gold to your portfolio of stocks and bonds, you can sometimes smooth out the ride and reduce your overall risk. But notice I said little slice. We're talking small here. Most experts would recommend somewhere in the neighborhood of 5 to 15% max. Any more than that, and its lack of growth can really start to weigh down your overall returns.
Okay, deep breath. We've covered the why. Now let's get down to the nitty-gritty and talk about the when and the how of actually buying gold. Now, after this incredible price run-up, you have to ask the question, are we in a bubble? I mean, anybody who bought gold at the last big peak in 1980 had to wait more than 20 years just to get their money back. That's a long time to wait, and it's a very real risk today.
And the honest-to-goodness answer is, nobody knows. Anyone who tells you they know where the price is going tomorrow is either lying or fooling themselves. Trying to time the market is a loser's game. If you do decide to buy gold, it can't be a short-term gamble. It has to be a long-term strategic decision that's tied to your personal goals.
So this is the really practical part. How you should buy gold depends entirely on your reason for wanting it. If your goal is that worst-case scenario insurance, you need the real thing, physical coins or bars that you can actually hold in your hand, bought from a reputable dealer. But if your goal is just simple portfolio diversification, then a gold ETC is way, way easier. An ETC is just a fund that tracks the price of gold, and you can buy and sell it instantly through your regular stockbroker, just like any other stock.
All right, let's do a super quick recap. 1. Gold is not a reliable hedge against short-term inflation. 2. It doesn't create wealth or pay you an income. 3. It can act as a powerful form of doomsday insurance. 4. It can be a useful diversifier, but only as a small part, 5 to 15% of your portfolio. And 5, and this is the most important one, your reason for buying it tells you exactly how you should buy it.
So, at the end of the day, this whole decision comes right back to you. It's not about whether gold is good or bad. It's about figuring out what you're trying to do with your money. So the real question to leave you with is this. What is your primary financial goal? And does gold have a logical place in that plan?